Click the bell icon to get latest videos from Ekeeda.
Hello friends, let us do one question of non-integrated costing records where we are required to prepare ledgers and there is involvement of over recovery and under recovery of overheads. Let us read question. As on 31st March 2007, the following balances were extracted from the books of Supreme Manufacturing Company, which follows non-integrated system of cost accounting. Store ledger control account 56,000. This is opening debit balance. Work in progress control account 60,800. Opening debit balance. Finished goods control account, opening debit balance. General ledger control account, opening credit balance. The following transactions took place in April 2007. Raw material purchased, stores debit, GLA credit. Return to suppliers, it will be reverse of this. Stores credit, GLA debit. Issue to production, work in progress debit, stores credit. Return to stores, stores debit, work in progress credit. Productive wages, this will be debited to wage control account, credited to GLA. Indirect labor, credited to wage control account, debited to factory overheads. Factory overheads expenses incurred, factory overheads control account debit, GLA credit. Selling and administrative expenses, selling and administrative expenses control account debit, GLA credit. Cost of finished goods transferred to warehouse, work in progress credit, finished goods debit. Cost of goods sold, this will be relating to cost of sales. Sales 4,80,000. Factory overheads are applied to production at 150% of direct wages. Any under or over absorbed overheads being carried forward for adjustment in subsequent months. Here either overheads under or over absorbed we record in costing profit and loss account, or it will be carried forward to next month for adjustment. Here they have said that it is carried forward for adjustment in subsequent months. All administrative and selling expenses are treated as period cost and charged off to profit and loss account of the month in which they are incurred. Show the following accounts in company's book: general ledger control account, store ledger control account, work in progress control account, finished goods control account, factory overheads control account, costing profit and loss account, and trial balance as on 30th April 2007. We have opened all necessary ledger accounts. Let us start doing the posting. Stores ledger control account, opening debit balance 56,000. To balance brought down 56,000. Work in progress control account, opening balance 60,800. Work in progress control account, debit side. To balance brought down 60,800. Finished goods control account, debit 40,000. Finished goods control account on debit side. To balance brought down 40,000. General ledger control account, credit 1,56,800. General ledger control account, credit side. Buy balance brought down 1,56,800. Purchase of raw material 1,52,000. This will be recorded in stores control account debit side and general ledger adjustment account credit side. General ledger control account credit side by stores ledger control account 1,52,000. Stores ledger control account debit side to general ledger control account 1,52,000. Material returned to suppliers 4,800. This will be credited to stores ledger control account and debited to general ledger adjustment account. General ledger adjustment account debit to stores ledger control account 4,800. In stores ledger control account on credit side, by general ledger control account 4,800. Issued to production 1,56,800. This will be credited to stores control account and debited to work in progress control account. Material issued to production 1,56,800. Material issued to production stores ledger control account credit by work in progress control account 1,56,800. This will be then debited to work in progress control account. Work in progress control account debit to stores ledger control account 1,56,800. Return to stores. This is returns of material from jobs to stores. This amount will be credited to work in progress account and debited to stores account. To the credit of WIP control account by stores ledger control account 4,800. Stores ledger control account debit to work in progress control account 4,800. Productive wages 64,000. Indirect labor 40,000. Both these amount will be added and debited to wage control account. Wage control account debit to general ledger adjustment account $64,000 plus 40,000 1,04,000. General ledger control account credit by wage control account 1,04,000. Productive wages 64,000. This will be applied to work in progress. It will be debited to work in progress and credited to wage control account. Work in progress control account to wage control account, direct labor or productive wages 64,000. Here wage control account credit side by WIP control account 64,000. Indirect labor 40,000. It will be treated as factory overheads, debited to factory overheads control account, credited to wage control account. Wage control account credit side. ऐसे लाओ अपन. By factory overheads control account 40,000. Factory overhead expenses incurred. This will be debited to factory overheads control account and credited to general ledger adjustment account. Factory overheads control account debit to general ledger control account 80,000. General ledger control account credit side. By factory overheads control account 80,000. Selling and administration expenses 64,000. Here selling overheads debit side. To general ledger control account 64,000. In general ledger on credit side, by selling and distribution overheads control account 64,000. Cost of finished goods transferred to warehouse 3,40,800. This will be credited to work in progress account and debited to finished goods account. Work in progress control account credit. By finished goods control account 3,40,800. This will have another effect in finished goods account. Finished goods control account debit side. To WIP control account 3,40,800. Cost of goods sold 3,36,000. This will be recorded in cost of goods sold account. To finished goods control account 3,36,000. Sales 4,80,000. This will be recorded in costing profit and loss account and general ledger adjustment account. General ledger control account debit side to sales 4,80,000. Costing profit and loss account credit side by sales transfer to general ledger control account 4,80,000. Factory overheads are applied to production at 150% of direct wages. Your direct wages are 64,000. 150% of 64,000. It is 96,000. Factory overheads control account on credit side by work in progress control account 150% of productive wages 64,000. So it comes to 96,000. Work in progress control account debit side to factory overheads control account 96,000. Selling and distribution overheads 64,000. This will be transferred to costing profit and loss account. This will be debited to costing profit and loss account. $64,000. Factory overheads control account. Let us close now. debit 1,20,000. Balancing figure is 24,000. This will be transferred to trial balance. This unabsorbed amount will be adjusted next month. Therefore, this balance will be carried forward to next month. $51,200 is a closing stock of stores. This will be transferred to trial balance. In finished goods control account, we are crediting cost of goods sold 3,36,000 and we are getting closing stock 44,800. This 44,800 will be transferred to trial balance. Wage control account is tallied. Balance is 1,04,000. Cost of goods sold debit 3,36,000. Credit we are required to put costing profit and loss account 3,36,000. Thereby this account gets closed. Costing profit and loss account debit side to cost of goods sold 3,36,000. Costing profit and loss account is showing profit of 80,000. This will be transferred to general ledger adjustment account. General ledger adjustment account credit side by costing profit and loss account. Profit transfer 80,000. We have closed general ledger control account. On debit side, it is showing balancing figure 1,52,000. Let us transfer these values to trial balance. General ledger control account 1,52,000 credit. Stores ledger closing balance 51,200. Finished goods control closing balance 44,800. Work in progress control account. We have to find closing. Closing balance of WIP control account 32,000. Factory overheads control account balance to be carry forward 24,000. Here total of debit and credit side of trial balance is tallying 1,52,000. So in this question we have learned how to give effect to overheads which are not absorbed or under absorbed to be carry forward and how to give effect to them. Thanks for watching this video. Stay in tune with Ekeeda and subscribe to our channel Ekeeda. Thank you.